I'm Charlotte McLeod with investingnews.com, and here today with me is Edward Sterck, Director of Research at the World Platinum Investment Council. Thank you so much for being here. Great to have you once again.
Oh, Charlotte, thanks very much for the kind invitation. It's always a pleasure to participate.
Really good to be catching up. And I didn't realize, you told me before we turned the camera on, it's actually Platinum Week right now. So you've been really busy all week with not just the World Platinum Investment Council's new report, but lots of things going on. So I wondered if we could just begin there and maybe take about some of your takeaways from the event.
No, absolutely. I mean, it's a packed schedule. It kind of started last Friday, really, and is continuing through to today. And I'll describe it, it's London Platinum Week. There are 3 Platinum Weeks around the world: London in May, Shanghai in July, and then New York in September. And London and New York are kind of interesting in that, they're not really conferences so much as an accidental gathering of people from all around the world in the same industry, in the same city at roughly the same time. But everyone has their own different events. There's lots of different interesting angles that one hears, because you've really got everyone there, from the producers through to all of the different end users, the recycling companies that sit in between, the catalyst fabricators, the jewelry fabricators, and so on. And of course, you've also got the investment community there as well. So in terms of the main takeaways, I think, firstly, we've seen actually a fairly decent price performance from platinum and palladium actually through the course of this week. And it feels like that may be in response to some of the things that people have discovered through the course of the different events. My key takeaway is actually probably the ones that really we provided as WPIC to people, which were insights into their ongoing strength in the platinum investment market, that's bars and coins, in China, and also how that's feeding through to the jewelry market in China as well. So we're seeing significant growth there, and really rapid. Now, it's worth noting that the jewelry market can kind of be divided into 2 categories. You've got your sort of high-end goods, and then you've got the kind of high quality but lower margin quasi-investment type goods in Asia. And so that's where we're seeing this demand strength, which is why I'm sort of linking it to the investment demand. But to give you some context, in the first quarter of this year alone, given the exceptionally high gold price, gold jewelry sales in China were down 32% quarter on quarter, and platinum sales were up 26% year on year. So I know comparing quarter on quarter, year on year there, but effectively, those are contrasting sort of experiences from the 2 metals. Why is the Chinese industry kind of adopting platinum now? Well, we've got high gold prices, obviously part of that. I think that's pricing consumers out of the market. Not so much because of the high price, as much as possibly perception that there is more downside risk to gold from here than and in contrast to perhaps upside potential for platinum. But also for the fabricators and retailers, they're reacting to those falling gold sales by looking to provide alternative products to their client base. They're also, by pivoting to metals apart from gold, that helps them release working capital. So it's quite encouraging for them. China's a market that can pivot really quickly. We're seeing investment products being sold on TikTok there. There's a lot of social influencers getting behind this, and I just have an email today from a colleague in China who's comparing footfall in platinum versus gold stores, and everyone seems to be in platinum stores and watching the gold ones. So it's a lot of encouraging news coming out of China. A couple of other takeaways, just on the vehicle emissions side. There's some regulatory changes that look like they're coming through in China and in the US that could be positive for automotive demand for platinum. So although we are seeing this ongoing electrification of the global drivetrain, albeit at slower rates than we've seen historically, actually from a demand perspective, there is some upside potential. Maybe a bit too early to bake into forecasts, but certainly encouraging.
Okay, really, really good to start with those takeaways. I think it's always so interesting to go to events and hear what everybody's talking about there. So we'll start delving into a little bit more of the WPIC's Q1 report on platinum. And I think one of the big overarching takeaways is the market is looking like it's going to be in deficit for the third year in a row. And I believe for Q1, it was the biggest single quarter deficit in something like 6 years. So maybe we can take a look at what's going on there and why we had Q1 stand out as a quarter that was in such a large deficit.
Yeah, so our quarterly time series goes back to 2013. And in fact, Q1 of this year would have been the deepest deficit of any quarter in our time series. But it's just with the exception of COVID in the first quarter of 2020. And that was also impacted by an outage at a smelter in South Africa as well. But yeah, overall, very, very weak. We saw mine supply struggle during the quarter. Production in South Africa was impacted by flooding events, a number of flooding events, actually, heavy rainfall there overall, and also some smelter outages. Output from Zimbabwe was also impacted by a smelter outage, and output from North America impacted by restructuring of operations there on economic grounds. So mine supply extremely constrained. There was a little bit of an improvement in recycling supply, but not enough to compensate for that reduced output from the mining producers. On the demand side, things look strong. I mean, we just touched upon platinum jewelry demand in China specifically being up so strongly, but actually we also saw broader growth in the rest of the world as well, which is a continuing theme for the rest of the world ex-China. In terms of investment demand, again, actually really strong numbers from China in particular, a bit of weakness from North America, in contrast, perhaps related to some degree to tariffs, and we should probably come back to that in a minute. But look, I mean, overall, there was pretty robust demand growth in those segments. A little bit of erosion to demand in terms of industrial demand. That's mainly led by cyclical reduction in new glass capacity additions. But automotive demand for the quarter was actually pretty steady as well. The story for the automotive on an annual basis is a little bit different, but for the quarter itself, just very weak supply and very strong demand. One other thing to highlight that boosted demand, in fact, is tariff related, and that's in terms of non-dollar coin, but exchange stock movements, which falls under investment demand for us. And so, based on the back of tariff fears in the US, we saw a lot of end users look to import metal into the US ahead of tariffs coming in, because there was a lot of uncertainty as to whether tariffs would apply to platinum and the other PGMs. And that draw of metal into the US resulted in some pretty strong contango in the NYMEX futures market. For speculators, that created an arbitrage opportunity, so you could go short the out months and go long in the spot market and capture that value differential as time closed that disconnect. Of course, to go short in the out months, you have to fractionalize those positions. So we saw significant exchange stock movements into NYMEX bond warehouses, and that very much helped boost the Q1 investment figure. We have started seeing, as tariff fears have abated a bit, some of those warehouse inventories unwind a little, but we're not necessarily seeing that metal move back to Europe yet. It seems to be stuck in North America. And it's worth noting, actually, that we still see significant market tightness. So we've got high lease rates, historically elevated lease rates, and we've also got an OTC market in Europe that's in strong backwardation. And both of those are signals of pretty tight market conditions.
Yeah, I think definitely tariffs were on my mind to talk about today, because when we last spoke all the way back in March, we were still kind of in that limbo time, although I guess in a way we are still in tariff limbo, but we really didn't know then how it was going to pan out. So good overview, I think, of how tariffs have been impacting the platinum market so far. Is there anything further you can say about how the effects we might see heading further into 2025?
Yeah, on the tariff front, I think there are, there's broadly three main areas where there is an impact. And certainly, I think as things stand at the moment, based upon our current knowledge of tariffs, these are baked into our estimates. So firstly, before getting into that, I should say that platinum in its raw forms is not subject to tariff. So platinum ingot, sponge, and bar, that's the kind of the raw form of metal. It's a critical mineral to most national governments around the world, and so the US has chosen to exempt them from tariffs. However, there are some platinum products that are tariffed. So cast bars and minted bars that are not legal tender are subject to tariffs. And that may be one of the influencing factors behind metal flows between Europe and the US, and perhaps not back again at the moment. But minted coins that are legal tender are exempted. So with that in mind, from an investment point of view, thinking about US investment specifically, that's about 70% of the US investment market was minted bars. And so they are subject to tariffs, and it's uncertain exactly what that will mean in terms of demand for platinum going forwards within the US, at least for this year. So our numbers have been adjusted slightly lower there for the full year. The other area, of course, fabricated products that contain platinum are subject to tariffs, so that could include jewelry. Europe is quite a significant producer of high-end jewelry that is exported around the world, including to the US. And so there may be a bit of downside risk to jewelry demand there. I would note, though, that the US does have quite significant domestic capacity for jewelry fabrication. So there's potential that the onshoring that Trump is trying to achieve with these tariffs will actually sort of offset that downside risk. The other area, of course, is vehicles. And certainly, where the tariffs were first kind of raised, and probably still the most robust, considering we've seen a lot of rolling back of tariff threats in other areas, but it's on the automotive industry. However, there is a price elasticity factor. Fundamentally, tariffs are going to increase the cost of vehicles within the US. Even if you're onshoring production there, production was moved overseas for on economic grounds, so vehicle costs are going to go up. On our numbers, every 1% increase in vehicle prices in the US reduces demand for new vehicles by 0.5%. And translating that into automotive demand, it works out at being about 50,000 ounces lower platinum demand for 2025, and that's how much our automotive figure has been reduced by. So we think the tariff risks for the automotive industry, as it stands, are factored in. One thing I would say, though, is that the Trump administration has shown willingness to give exemptions to automotive tariffs. The UK is an example where, it's the only example so far, but a recently negotiated deal means that the 25% tariffs that are applied to vehicles produced outside of the US are not applied to UK-produced vehicles. The first 100,000 vehicles only attract a 10% tariff. Not as good as where we were last year on much lower tariff rates, but it's still less than 25%. But it shows the willingness to negotiate, and that could have implications for other countries, and so therefore the overall automotive tariff threat.
Very, very tricky to talk about the tariffs right now. So appreciate you going into that. And I think you've covered investment demand for platinum fairly well. We talked about the tariff-related movements. You're speaking about what's going on in China with people starting to maybe favor platinum over gold. Are these dynamics, I guess it was quite strong in Q1 for investment demand. Is that expected to continue as the year goes on, or will we see some mitigation there?
I think overall we would expect it to broadly continue. As things stand at the moment, what we're seeing in terms of investment momentum is running ahead of the numbers that we published in our Platinum Quarterly. It depends upon the pace of momentum for the rest of the year. Maybe there's some downside risk in the US, but certainly we're just seeing China continue to go from strength to strength. So. Like I say, what we're seeing in terms of on-the-ground numbers is higher than we've put out this week. So there is some upside potential if this momentum is sustained.
Okay, and that investment demand strength, I believe, was kind of balancing out the little bit of weakness in the industrial side. And the report goes into how this is going back to things going on in the glass market. So curious if you can go into what is happening there.
Yeah, so if you recall from our previous conversations, for a lot of the industrial applications, platinum is not consumed in the production process. There's a little bit of loss through wastage, but overall, platinum isn't consumable. So really, what we're looking at is when you build a new industrial facility, the big demand pull is when those facilities are commissioned and you populate them with the platinum required to operate these facilities. And glass is like that. So when you build it, you populate it with the platinum, rhodium, alloy that's used to create the glass bushings, for example, the glass fiber, the fiberglass drawn through, or the casting vessels for high quality glass like for LCD consumer electronic screens. And so as a result, it's the momentum of new capacity additions that has the biggest driving effect upon gas demand for platinum. Now, we've just happened to have 5 years of really significant above average capacity additions, and we're just entering a natural cyclical downturn from that. And so that's what's reflected in the numbers for this year.
Okay, let's head over and take a look at what's going on with supply, because that's quite interesting too. I believe it was down 10% year on year in the first quarter, and for 2025 forecast to come in at the lowest level in 5 years. So for this past quarter, it sounds like there were some maybe unexpected disruptions, but I'm wondering if you can go over what we've been seeing in terms of supply, especially the mine supply.
Yeah, so, I think a bit like the quarter, actually, if you exclude 2020, the COVID years, with the, like I said, that furnace outage in South Africa also having an effect in that year, mine supply this year is projected to be at its lowest level since the 90s. I think it's 1998. So it's a really long time. Effectively, we're just seeing a situation where, although we've got these deficits for platinum and actually for palladium too right now, we're not seeing that really being reflected in price. There's a buffer of stocks that are helping to balance the market. We think that those are depleting to unsustainable levels, platinum in particular. But going back to that later, perhaps, for the miners, they're having to deal with comparatively low metal prices, and so that's weighing on their economics. And as a result, they've been restructuring over the last couple of years. That's resulted in some direct erosion of mine supply. But we're also seeing them being fiscally cautious and really cutting back on things like capex, so trying to minimise their expenditure. And what we've seen over the last previous capex down cycles is that just gradually erodes mine supply output over time. So it's not a massive number. It's typically about a negative 2% CAGR, but over a few years, which is what we've had, that begins to have a meaningful impact. And it's pretty difficult to see that trend switching right now. I'd also add that, let's say, hypothetically, we saw metals pricing begin to react to the underlying supply-demand shortfalls. And it's really difficult for these deep-level underground mines to react quickly. They're very price inelastic, and that's just a function of the fact that you're operating at depth in tabular ore bodies. It's very difficult to flex output from those ore bodies. So the reality is, even if we have a run in prices, we're unlikely to see a significant change in mine supply. Touching on recycling briefly, we're in a secular downturn in recycling. Again, recycling is actually recycling volumes are quite sort of price positive in a way in terms of their relationships with low metals prices. You don't see the recycling economics are quite challenging, and so relatively low recycling rates. We are seeing that improve a little bit in certain geographies, particularly in China, and stabilization in North America and Europe. But certainly there's no reason to expect a significant increase in recycling this year, but a modest uplift from the significant lows that we reported for 2024.
On the note of mine supply, is there any chance with the higher gold price we see gold miners ramping up their production? Maybe we get more platinum as a byproduct of that. What are your thoughts there?
I mean, I don't watch what the gold miners are doing particularly, but there aren't, as far as I'm aware, I don't think any of them really produce material amounts of platinum as byproducts. So it's more the gold as byproducts of the PGM mines, but it's the other way around.
Okay, makes a lot of sense. And of course, we've got to talk about what's going on with the price. And usually when we have these conversations, we talk about how it's still range bound. But as you're mentioning at the beginning of the conversation, this week during Platinum Week, there's actually been some price movement. So any thoughts? I know it's tough to make price predictions, but any thoughts on prices in 2025 and if that rise we've seen lately is sustainable?
So, I mean, given the nature of the organization we can't forecast price, but just to say, I think, yes, as you mentioned, I've talked for quite a long time about this range bound price activity and how that range has been pinching out. With the price response we've seen this week, we've definitely gone through the top end of that range, but you can have that curve still kind of, we haven't gone too far through it. It's not fundamentally structurally broken the range. So we may come back into it. But certainly, given that we're seeing that market tightness in high lease rates and backwardation in the OTC market, it does feel like things are a bit different right now. So, cautiously optimistic. It feels like as that range is pinching out, we're definitely getting to a point where it seems highly likely that the platinum price will begin to reflect the underlying deficits and the fact that these above ground stocks are depleting to unsustainable levels. So we'll have to wait and see.
Very fair. So we won't get too excited just yet, but we'll see how it goes. We'll keep watching. Okay, I think that was a pretty good rundown of supply and demand aspects of the report. Any final thoughts you would leave platinum investors with at this time?
Look, I think platinum's fundamentals are just highly attractive at the moment. You've got really constrained supply. You've got demand that is actually beginning to show some real signs of growth, driven principally by an inflection in jewelry demand and by ongoing growth in investment demand. And so, given those things are resulting in these really significant deficits, this is the third year of almost 1 million ounces deficit out of an 8 million ounce market. Those are just rapidly depleting their above ground stocks, as I've already mentioned. By the end of this year, we get down to only just 3 months of demand cut. And that is only half of the sort of rule of thumb of 6 months that is considered to be a sustainable level in commodity markets. So, this is all generally coming together as a perfect storm. We are seeing that tightness in the market, and I feel quite optimistic that we're going to see that long-awaited price response come through.
Okay, well, I will certainly cross my fingers that everything continues to come together. So thank you so much for coming on to talk about platinum. This was really useful, and we'll see you again very soon.
Thanks, Charlotte.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Edward Sterck with the WPIC.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.